Small cap is a very interesting area where the investors look after, because here is where they get companies which may have a multifold growth potential. But the point is, these companies may be very volatile and they may be nightmare for some of the investors. But the interesting aspect is they can become a multi-bagger as well. So how to find a smart, a small cap companies is what this particular video. And we are going to reveal three small cap companies where you can start investing in 2023. And here are the list. And this particular companies, being a small cap company, doesn't mean they are a small companies. They do have a small market cap, but the point is they are the industry leaders in terms of their business. The whole industry itself small, but they are actually the leader in that particular industry. Number one. Number two, they were able to show a consistent sales growth for a period of 10 years. That's very interesting. And number three, they are having a fairly good return on capital employed. So if you look at their ROCE there, it's about more than 20%. So in all these three grounds, they share the qualities of a large cap, good quality companies. But the only reason we are looking at these names in the small cap because the market cap is very low. Let's see what company may be our choice and looks for a reasonable growth potential. If you look at a company one, which is Avanti Feeds, and if you look at the Avanti Feeds, the market cap is under 6,000 crores in a way that it is available at 5,261 crores. And if you look at the share price, as I said, it is one of the a crazily appreciated stock by various investors, but the last 2 years was not great. It is somehow underperforming the market. And this may be because of their return on capital employed may be slightly low at the recent times. But nevertheless, if you look at the sales growth, what it actually showed on the yearly perspective, which showed a stellar performance from 200 crores company become 5,000 crores sales performing company within a very interesting bit. And even if you look at the PE, which is available at a moderate PE, in a way that it is again interesting aspect. And if you look at the return on equity is only 11%, but return on capital employed is now 17%. They used to have so they are slightly into the cyclical as well. But the point is they are the market leader. So that's one. Number two is GTPL Hathway. And again, they are the national leader with respect to MSO business. And their market cap is only about 1,600 crores. And if you look at the PE, which is only about 8.2, and the share price is 144 as on 5th Jan. But if you look at the overall behavior, they are just about they are into the range of 50 to 300, and now it is available at the median price of 150. And if you look at the return on capital employed, they are doing fairly well in the recent times, and their promoter holding is pretty much stable in this grounds, and the public proportion is also around this particular percentage. So in a way that they are also a fair bet in terms of looking at the sales and looking at the return on capital employed and looking at the size and looking at the market share in their particular industry. So in a way that this is something which is again an interesting bet. So the third one is, let me give you a quick update before I go to a third company. The point is, at Axis, we do have a practice of recommending long-term investors. And if you look at our recommendations, especially from a long-term investments, are mostly the large caps and mid caps, not much from the small cap. Its reason being is very simple, that we want to have a less volatile behavior, and in a way that these stocks may not match the exact list. But if you want to stay connected with the flow of Axis, then what you guys can do is you can go to equisys.com, go to a section called apps, get into Axis Invest, and this is a platform. And if you subscribe to this particular one, you get an access to get our recommendations to stay invested from a long-term perspective. So if you wish to join us, hit this button and let us know what amount you wish to invest every month, in a way that we can give you the list of companies to buy for that particular amount, and everything gets delivered via our platform, and in a way that it become easy, in a way that we remind you right on that particular day, and then you stay invested and you get a list of companies, and we can also review them very closely. So I hope you will get a very interesting long-term journey along with Axis support. Happy investing, stay invested. Let me now go to the third company. So the third company is Shivalik Bimetal. If you look at this company, which is around 2,300 crores market cap, and the PE is around 36, in a way that it is a modest, it is not a low PE. And if you look at the return on capital employed, it is 35%. And this guy is the market leaders in the product. There it belongs to the industries of welding and other activities. So you can definitely go and read them in detail as well. But if you scroll down to see the return on capital employed, they were pretty low at early days, but from 2017 they were able to show the uptick. From 2016 you were able to show the uptick, and now it's around 25 to 35%. So in a way that it is an interesting bet for someone to look for the good run, and this is fairly shown in the price behavior as well, especially in the last 1 year. So in spite of the current level, the PE seems to be at 36, but still they seems to be slightly attractive. So these stocks, anytime comes at an affordable price, may be an attractive bet for someone to get started. So these are the three stocks, maybe a good for from the mid small cap sized for long term investings when in the year 2023. Hopefully you got some reasonable idea from Excess, and wish to see you with the next video.